Hello and welcome to this week's Middle Class Investor. This is Seth Martin, your host. It's about 12 o'clock on Saturday, and we had a pretty big week in the market. The internals were very strong. The price action was very strong. Looks like to me we're done. I mean, we might pull back here in the short run, maybe back to here and then take off again. But clearly the price action is to the upside at this point. We are in this resistance zone, and this could actually run pretty far. So if you're in 401ks or if you're already in there, sit tight, hang on to your money and let it grow a little bit. Bond funds are another story. As you know, I've been talking pretty negatively about those for a while, and if you've stayed in them, you've probably made money because the interest rates have continued to go down. But it looks like to me that that's about done, and we'll cover that in a second. But I've got this little area right here that I'm kind of thinking maybe you might have a short-term pullback. We could maybe run up a little higher Monday and then pull back into this area and then start to take off. And I think you'll find this next move here will be pretty strong. It just looks like to me that the market, there's a lot of strength in the market. Now, if the yields start to really accelerate higher, I mean this could be tempered quite a bit, and so we'll have to watch that. But I think the odds are pretty good for a pretty good run up. We might have this coming week might be down, half the week or something, and then finish the week, back toward the upside. So look for the market to continue its march higher, at least more into this decision point box, this resistance box, and continue higher from there. Let's see. I was looking for the volatility index. So volatility is down again. It's in the lower part of that range again. Pretty much every time it's gotten down into this range, it hasn't stayed down there forever. It tends to bounce. So it'll either stay down here and kind of bounce around, or you might see it come to the top of the range. It could stay in this range for some time, just back and forth. But it doesn't seem to want to get much below where it is right now. So that's why I think early in the week we'll have some pullback. We might finish the week a little stronger. But just watch that carefully. And but like I said, I think there's quite a bit of upside here in the market, and you can see yields. This is a pretty strong move in yields. Now we're still just off the bottom, but we did have this consolidation pattern, and we did come down to like a decision point off of this low here. That's what this area is right in here. And so it did reverse in an area that makes a lot of sense. I'd say if we get above maybe this area right here, 1.9, you might, if it does get above that area, 1.9, you might have something like this, and then a pullback, and then higher. If it starts to do this could temper the market quite a bit. Right now, the consensus is everybody thinks rates are going negative in the U.S. and usually when everybody thinks something's going to happen, the opposite happens. So as long as that negative rate talk is still going on, it's probably not likely to happen. Speaking of rates, we'll zoom in on our This is the chart I've been looking at, the IRX. I told you that if we get above this line right here, that the Fed's likely to raise rates. And so far we're above this trend line and kind of marching upwards. So if we start to see prices close above here, I think you'll probably look for the Fed to raise rates. And the other thing is just the 10-year yield itself. If the 10-year starts to really take out, like we could kind of move this downtrend, maybe extend this. I don't know, to right there, let's say. And if rates get above this channel line here and start to move out, then you can pretty much look for the Fed to start raising rates, because they don't want to get too far behind this curve right here. Plus you had that, the job market's been really strange. We had that really low jobs number, and I don't know what it was, but it was like 40,000 or something, 38,000. And then this past week we had one that was, or this past month we had this one that was like 280,000. So I think the key there is to look at the revisions. The revisions have all been, they've been revising everything downward, so and not upward. So I think the jobs data is not accurate, and you got to just look at the revisions. If you look at the global market, I mean, Germany is still, down. You can see it's below this channel line that we've had on here. It really hasn't. Now it's starting to spike up, but I mean, the odds are once it's in this downtrend, until it breaks through this line here, you really have to consider that the downtrend is intact. Now, this is a pretty strong move off the bottom, so we'll just watch. I mean, it could come up above here and then kind of do one of these back to the trend line, and then if it does that and then bounces, then look for Germany to start moving out. But right now this downtrend is pretty well intact, and I don't know, it looks very corrective. So it looks like Germany could come up here and make a new high around this 33 area, but until it breaks this downtrend line, you really don't know. Now Japan has broken this downtrend line. You can zoom in here. As you know, they've done some more QE in Japan, and anytime you devalue, this is in yen, okay? So this actual chart's in dollars, but their market is in yen. And so if they devalue the yen, then the market, has to go up, because there's more and more yen out there. So you're dividing the total value of the market in yen divided by how many yen are there. So it tends to raise the market. This is just an inflation. This is why in a high inflation environment, the market tends to go up. So we could very well see the yen move up here. Now, I'm not the yen, the Japanese market. Now the currency is another story. Their currency is falling like a rock, which makes sense. If the currency is falling, then this should be rising. The United Kingdom, there was a lot of news on the United Kingdom leaving the European Union, which to me, I don't see how more freedom could be a bad thing. So what you've got in this chart, which is interesting because you had this even before the Brexit. You got these lows back here, and then after the Brexit, see where it reversed on a higher low. So that means you've got a break of the trend line right here. So we came up and we broke through the trend line, retested it, bounced through it, but to a higher low. That means the UK is going to be rising. So if you're in Great Britain and you're looking what to do with your 401k, this is a great place to enter your 401k to make some money. Incidentally, going back to our market, let's just go back to the S&P 500 here for just a second. Notice that we really don't have, I mean, we have a downtrend, but it's very shallow. Let me zoom in here just to contrast the UK market and our market. You know, you've got kind of a downtrend through here, but it's very shallow. And the problem we had is we had a low, and then we had lower lows. So, you know, you really couldn't say that this is in a new uptrend until really maybe last week or the week before, and with a whole lot of risk, you know, to the downside. So we've got a little bit different scenario here. It's still the same kind of principles. You know, you got a downtrend line. We broke through the downtrend line. We've got a higher low, you know, and so on and so forth. But man, this is a wide range here, and until it really firmly got out of this range, you really couldn't say that the downtrend was over. And with the way these drops are right here, you could have pretty quick losses. So I still think we're going to get, you know, we'll probably get a pullback short term into this area above this line somewhere, and then a rally, and I think we'll be in a pretty strong rally. Now, you know, you look at the economy, you look at the world, and you see all this stuff going wrong, and, you know, craziness everywhere. There was a attempted coup yesterday in Turkey. You've got all these terrorist attacks. Why the market goes up, you know, I don't know, but that's why you can't look at that news, because it'll just mislead you every time. Or the Brexit, you know, the Brexit's going to be bad for the global economy, and lo and behold, you know, the UK is going up, the US is going up. So none of that news. Don't get too wrapped up around the news. The news can have an effect, but it doesn't generally change the trend. So just be careful with the news and trying to understand the news and things like that. It'll mislead you. All right, let's look at the U.S. dollar, and well, this is actually gold. Let's look at gold first. So we've had this long, you know, we had this big run up in gold and this long pullback, and it pulled back into, you know, just to recap, we initially had this area. This area is our support, and we were looking at buying gold coming off of here, and then gold, it faked us out and came back down and made a lower low. But then we had this area where we said anywhere in here was a good place to buy gold, and that's, you know, that's turned out to be very true. Now we're at a decision point in gold right in here, and we got a pretty bearish looking candle here. So I would say gold's probably going to be pulling back, and likely place for it to pull back is this area right around $1180, $1,200, right around in here. So if you're looking to buy gold, maybe wait a few months and buy it in this area right in here. Okay. Let's look at the dollar. The dollar, you know, had this really strong rally a while back, right in through here, and then it chop. This was driving me crazy right here, but then you can see that right in here it kind of broke out of its downtrend line and started moving higher. So right in here, the dollar, you know, the dollar's, you got a low, you got a higher low, a break of trend line. You know, the dollar is moving out again, which is probably going to bring gold prices down, and it could have, depending on how long this takes. I mean, these are things that could work negatively against the market. We'll just have to see. Generally speaking, if the dollar goes up, the market doesn't really like that. I mean, but if you look here between, you know, mid 2014 and the end of 2015, if you look at the market there, let's look at the S&P 500. So 2014, you know, right in here, it really didn't go down. So it went down here, kind of September area, but then turned around and went right back up. So, that strong dollar doesn't always take the market down. So can't really count on that. Let's look at oil real quick. Oil has been fairly strong. Same thing. We broke this downtrend line. If you make a downtrend line right in here, we broke the downtrend line. We made so it's kind of the same old story. Downtrend line. We had a low. We had a higher low. Break of the downtrend line. Up. Okay. Now, oil. It's kind of in a precarious area right now. It could go ahead and make one more new high just above this high. But then I think you're going to have a pretty good pullback in oil. Not sure if it'll be to new lows. We'll have to watch and see if it comes down here and breaks the old low and to our target. We've had this target on here for a long time. Or does it fall short, right in here and reverse? So we'll just have to wait and see how that goes. See if I can get somehow my system is locked up. Oh, there we go. So, let me back up a little bit, and you can see this low that we had in here. This is kind of the pattern we're expecting in oil. And so we're looking for oil to pull back, to make a new low around here, around 22, 23, maybe even lower, maybe $18 a barrel, which is crazy. I know that sounds crazy, but you've got it's a commodity in a very long-term bear market, and the good news or bad news, depending on if you're a buyer of gasoline or if you're an investor in oil, once this downtrend is over, we're going to be starting a new uptrend that's going to be very powerful. Probably take oil way above $200 a barrel, maybe $300, $400, $500 a barrel. So, which I know that sounds crazy right now, but which tells me that we're going to have some sort of inflationary event in the future. So this could just be the first big move up, and this is your first correction, and we know what that means. That means a wave 3, which could be pretty significant. So let's see, is there anything else we want to look at? The euro US dollar, it's still in this, I've kind of attempted to draw it here, but I really didn't do a very good job. But it looks like oil oil. It looks like the euro is not through making this move here. So just shift all this over a little bit, and you'd expect the euro to come here and then work its way up, back up into here, and then a new low at that point. Again, this is a continuation pattern. So the trend is down, it kind of pauses, and it pauses in this tightening of like a coiled spring, and then it continues. And you usually get, a new low below the beginning of the coiling action. The Wilshire, we've looked at the Wilshire before. The main reason I'm looking at the Wilshire is it's still not at a new high. It's likely to get a new high. As you can see here, the old high is back here, and we're getting really close to a new high here. We're just a few points away from a new high. So the Wilshire's likely to make a new high, which means probably that this is the start, this run from here to here. So let me say that. Anytime you get a new high, that means that this whole up move is the beginning of a new trend higher. So what does that mean? That means that this is going to go quite a bit further. Now it could pull back first. It could pull back, to here, let's say, and then go higher. But this is the beginning of a new uptrend. That's what that means when you make a new high like that. So keep that in mind. Silver, we looked at gold. Silver looks like it wants to make maybe one more new high before pulling back, but either one of them really are very extended here and are likely to pull back. So keep that in mind. I've talked about this before, but the commercials are the people that are in the business of producing gold and silver, and then the large speculators are things like hedge funds and stuff like that. So commercials are at a net short, all-time high net short kind of thing, and speculators are all-time net longs. So usually commercials are right at the turns. So we look to the commercials to kind of tell us on commodities when where the turns are, and it's basically telling us that we're right there. So silver could make one more new high. I mean, it looks like this pullback was not as definitive as the gold pullback. So you could see silver make a new high and then pull back into this area and maybe work its way back down into the $15 range. I think that is it. I think we've looked at everything. I was doing some guessing. I don't know if I can even get all this on one page, but if this 5-way rally started back here in October of 2011, and this was wave 1, this was wave 2, wave 3, wave 4, then your minimum wave 5 is up here. We're not that far away from the minimum wave 5, and maybe that's all we get out of this rally. But the way this has moved up, it looks to me like it's going to probably move out longer, maybe further up into this. Let me scroll down here a little bit to this typical wave 5 around 2,500 on the futures. So that means quite a bit higher for the S&P, and we'll just have to wait and see. I mean, there's nothing is for certain. Nothing has to happen a certain way. But we are at short-term resistance here, so we should see some sort of pullback. If we get a pullback to below here, we will probably have to reevaluate the trend, but it doesn't look like we'll get a pullback quite that deep. I'll go ahead and put it on here just for grins and giggles. But we are at DP resistance, and we could see some sort of pullback. So, and maybe we could get a pullback to here, and we're still potentially in an uptrend. So, we'll just have to take a look at it. So the market, it's different all the time. I mean, there's parts of it that are the same, and the patterns are the same. But at the turns, the way it tops, the way it bottoms, it's always different. It never seems to bottom or top the same way. So we just want to try to keep an open mind, try not to have too much bias. I know what we never did. We looked at yields, but let me go back to that real quick, because I think I was going to try to show something there. There's let's look at the 30-year. Yeah, I'd have to get too near term to show you, but there's a particular pattern that has been developing here on the bonds. That's an ending diagonal, and the ending diagonal is a terminal pattern if it plays out. Now, you've probably heard the ending diagonal before when I was talking about the S&P. For like a year, we talked about a potential ending diagonal in the S&P. From here to here, we had a line. Let me just draw it real quick to refresh everybody's memory. We had a line from here, and we had it drawn like this, and then we had this line drawn basically like this. And you can see that this can, well, let me take this off. You can see that this is converging into this ending diagonal, and a break of that is usually terminal. The problem with this particular ending diagonal is it wasn't happening at the end of the wave. Normally, ending diagonals happen in what they call a wave 5. So that's the one thing that made this not exactly ideal. In fact, I mentioned that I'd never seen one this big and didn't know if it was going to play out or not. So anyway, but we do have an ending diagonal in the bond market, and it is shorter term, and it is in a wave 5. So those three conditions could make it a valid ending diagonal, and certainly we will have to keep an eye on that. It's another reason why I think the risk in the bond market is picking up. So be careful in your short-term bonds. I mean, in your bond funds and your 401k. I drew that in the wrong place. And don't get greedy. It's much better to have your capital long term, and instead of having regrets that I should have got out or should have done what Seth said on Middle Class Investor. Don't do what I say. Take what I'm telling you and use it to help you make a decision that fits your style, your investment horizon, all that kind of stuff. Okay. All right, everybody, that is it for this week. I want to thank you for coming in. You can go to the Middle Class Investor YouTube channel and watch these videos. You can copy and paste the link, send it to a friend. You can go to at InvestorClass, or follow me on Twitter at InvestorClass, or you can just search on Middle Class Investor and you'll find the Twitter link there. It has this little logo hidden here, this green bull and bear, and continue to stay with me. We'll navigate this. I think there's some pretty good upside here for a little while, and certainly should be out there trying to make some money if the market's giving it to you. All right, everybody. We'll see you next time. Thanks for coming in. Bye bye.